and also started 2021 on a profitability trend, and that was for the first 6 months of this year as well. All right, Jane, what impact will this news have on the MBV stock on the local market? Because we've been seeing that particular stock rally since they announced that indeed they were planning to diversify their portfolio this year.
Okay, so when we look at a company or giving a projection on what we expect in regards to the performance of a company in the stock market, we first look at the historical performance.
Yes.
So if we look in 2020, the company was making losses. It made a loss of around 39.4 million last year for 12 months. And within 6 months, in 2021, they've made a profit of around 32.9 million. That's like a 360 turn on this company, and it is brought by the different structural changes they have made. So if we also look at their stock market, they opened at around 4.28 Kenyan shilling per share. Right now, they're selling at 6.1 Kenyan shilling. That's a growth of 42.1% within 6 months. And it's ranked number 2 at the NSE. So we are seeing that NBV has shown growth over the past 6 months, and investors will be looking keenly at this company because their diversification is very strategic. If we look at the companies they've gone into manufacturing and they've gone to automobile. In the NSE, a company like the only listed automotive company at the NSE, that is Car and General Kenya Limited, has proven to be the best performing at the NSE. It has recorded 63.3% on a year-to-date performance. That is Car and General Kenya Limited. So NBV going into the automobile industry, we are looking at why have they gone into it. They've seen companies in that sector are performing well. So we expect the stock to perform even better within the next few months or even years, because they have made big moves.
They made big moves. Jane, I'm going to come back to you on that, because if you speak to other analysts, they'll say, wait, this could just be market reaction in the short term. I don't know what is short term on the lockables. That's why I want to bring in George as well. George, you hear what Jane is saying? I mean, a 42% growth in that stock in 6 months from a starting of 4.82 to 6.1 now is huge as well. And when you're turning your business from a no revenue making business to a revenue making business in 6 months, it's got to count for something. George, how potent are these particular areas now that MBV is looking into? George, could you unmute your mic, sir? It's unfortunate we still can't get you, George. Is it from our end or from George's end? I pretty much can't make it. Can you confirm you can get me again, George? George can't get me. We can't hear him. It's unfortunate. Let's try and work on it. Let me bring in Jane as we try and fix George's end. Jane, they're thinking that it will be a bit too early. Do we have George? George, could you confirm you can hear me?
I can get you clear.
Fantastic. Fantastic. And also get you now. George, your question was, how potent are these areas that MBV is getting into? Because now we do know that we are actually going to look at MBV's performance based on this particular industries and sectors that it has actually gotten into now.
Elijah was saying that this is a counter that I would be cautious to advise my investors to invest in,
Yes.
especially for the longer term investors. For the short term investors, yes, they can get into this counter, but for the long term equity holders, I would not really advise.
Again, we seem to have lost George from his end as well. Jane, are you online? Could you get me, please? Can you get me? Sorry.
Yes, I can hear you clearly.
Fantastic. Let's fix George's end. You hear what George was saying just before we lost him there. Isn't that it's not a particular stock that he can advise his investors to actually put their money in. Jane, do you share the same sentiments? And when we're talking about long-term market reaction vis-a-vis short-term market reaction, would you say that what we've seen from NBV could be quote-unquote a short-term rally on the local bulls? So we should give them time. And if I give them time, then what is a long-term stability of a particular stock on the NSE, Jane?
Okay, so before we lost George, I did hear what he was trying to say.
Yes.
He said that he wouldn't advise on a long term, but he would advise on a short term. I do concur with him because if you look at the stock, it has been volatile for the past 1 or 2 weeks. You'll find that the price has been really volatile. So that's where I get George's point of view. But in regards to long term, I feel we as analysts, we should look keenly into the sectors, especially the manufacturing. You know, they have gone into different sectors. There's manufacturing, there's automobile. One person would say the automobile will perform well, but another one will come in and say, what about the manufacturing? And then if we also not only look at the stock market, we also look at the bigger view of our market as Kenyans. They've gone into manufacturing, but specifically cement manufacturing. They're importing raw materials to manufacture cement. We are seeing Kenya is growing. There are so many constructions that are going on. Although the real estate sector has been hit, we are seeing that us as Kenyans who still have housing deficit of around 2 million, and the deficit is growing at a rate of around 200,000 every single year. And we're also seeing infrastructural growth within the country. Cement will be an important element. So yes, they've gone into manufacturing, but they've gone into cement. Why? We'll be looking at the bigger picture.
Yes.
So George said short term. I wouldn't put a finger exactly on what I would advise an investor right now. We need to look at our forecasting methods in different angles.
Yes.
Because I've said yes, there's volatility, and two, going into sectors that are viable at this point.
That's the thing, Jane, and I know we have George back, but the same points that you're giving us this morning, Jane, are the same points that some analysts are looking at and saying that what could be a positive for NBV could also be generally a negative for NBV, because now we're not looking at NBV as a particular company, just a conglomerate of different businesses that are coming in that might not really be easy to project where that particular industry or sector's performance could be at. George, let me bring you back in. Before you stepped out, you were on the point for not for long-term investment, but could be good for short-term investment. Why, George?
Elijah was telling you that if you look at the financials of NBV over the last 1 year, that is for the year ending 31st March 2021.
Yes.
Their gross revenues of 45 million vis-a-vis a cost of sale of 41 million, meaning their gross profit around 4 million. And then there's something that they posted there called other incomes. If you interrogate that, Elijah, it was a restatement of financial liabilities that they accumulated over time that they restated back into their profit and loss account. And that is what gave them the turnaround of 32 million profit. Otherwise, if you exclude that exceptional item, in accounting, you call it exemptional item,
yes,
then they would have made a loss of around 20 or so million. That is why I say there is a counter that I'll be very cautious to invest in as it were today. Then number two, Elijah, NBV is going into industries that initially they have not been into. Remember, they were in leather and accessories. That is what they were doing before. But now they're going into aviation. They're going into auto industry. They're going into construction. That is cement. And if NBV was an investment company, Elijah, then I would say that is a good move. But remember, NBV is not an investing company like Centum. It is a company that had a particular line of business. And if it is going into this 3 or 4 lines of business at the same time, Elijah, then there is an investment risk there that I believe the people that sit in their strategic room should look into. So this is a counter that I think is a counter to look into for short-term investors. Yes, those who want to capitalize on the share price, because some of these news when they come into the market, Elijah, especially if you report a profit, almost 100 or 200% profit jump. And almost 100, because in 2020 they reported zero income.
Yes.
By 2021, they reported an income of 45 million. For short-term investors, they'll jump into that account and buy into it. But for any long-term investor, I would advise that we hold and see how this pans out in the next one or two, or in the next 1 or 2 quarters before you make a decision to invest heavily into that counter. Number two, Elijah, if you look at the management of NBV, they have not been out there to tell us their strategic plan or what they plan for this in the next 5 or so years.
Yes.
Therefore, that is a document that I would be very interested to see before I advise any investor to jump into this counter. For short-term investors, Elijah, yes, but for any long-term investors, caution is very paramount, Elijah.
Pretty much. Caution is very paramount. Let's move on to the last issue this morning that we have for you, and that one is on the Kenya shilling. Now, the Kenya shilling weakened further against the dollar Monday, trading on a 10-month low of 110 and 20 cents level seen last on December 22 last year, when it hit 111.3 of a cent. Now, with the analysts putting the performance on the increased import activities by local traders, the shilling strengthened against the dollar in later trading sessions, touching 110 and 90 cents in the afternoon. Now, Metropole Harvest quoted the shilling at 110 and 90 cents against the dollar on Tuesday, with AIB Capital researchers attributing the current depreciation of the shilling to high petrol and diesel prices. Let's look at exactly how it's opening this morning, because we do know we put it at 111 again on Tuesday's closing. Jane, can't we put this pressure solely on the high import bill occasioned by the high fuel prices internationally, on why the shilling is sort of trading at that weak point at this time?
Okay, so when we look at the performance of the shilling, we look at various factors.
Yes.
One, we look at trade deficit in terms of balance of payments. We also look at government debts. We look at the monetary policies that are available. We also look at factors like forex, that is the reserves that we have as a country. Forex reserves, yes. So right now, when we look at the global crude oil prices, they've hit a high of around $85.5 a barrel. So what this does, it increases the trade deficit. So when the trade deficit increases, that is, our imports are actually higher than our exports.
Yes.
And it puts pressure on the shilling since there's more demand for the dollar within the merchandise of importers. So yes, we can say the increase in global oil prices has led to pressure on the Kenyan shilling, but that is just one of the factors. We also have other factors that have contributed to this pressure. There's rising uncertainty because the economies are opening up. So many traders are still holding onto their dollars, expecting that when the economy reopens, there'll be better partners to trade with. So yes, crude oil increase in price has led, but there are other factors that are playing within the pressure that the Kenyan shilling is facing right now.
Yes, fantastic. George, let me bring you in as well. In the past, and actually that happened last year as well, when the coronavirus pandemic sort of pressures were pushing the Kenyan shilling off the roof against the US dollar, we did see the Central Bank of Kenya coming into the repos market just to try and stabilize the Kenyan shilling standing against the dollar. Do you think they need to do that right now? Because we are still on levels higher than even what we witnessed back in December 2020, George.
And I think it is the central bank's prerogative to try and stabilize the Kenya shilling. Remember, when our exchange rates go that high,
yes,
then it has a ripple effect on our inflation rates. Then you have what we call imported inflation, because if you're paying so much to import your merchandise into the country, then that drives your inflationary figures.
Yes.
So I think the central bank, I think in the next MPS, they'll have to address this and give us a way forward. I know something 3-4 months import cover, which is a good FX reserve for the country. So I don't see any major risks, as it were, in terms of our foreign exchange rate figures as it is today. But CBK must come in handy and try and stabilize this. The moment it starts hitting 111, 112, then that is a space that we don't want to be in. I think the Kenyan shilling should be trading at between 104, 105. That is a reasonable space for the Kenyan shilling to trade in. But just as Jane has said, since some of these things are what we call global economic impacts, and also what we call the geo economy. If you look at energy prices across the globe, it has affected several economies. You saw what happened to the UK the other day. You've seen what has happened to EU. I think that they're having energy crisis in the EU, and Russia is not helping much by holding natural gas and not supplying the EU. So these are likely to play for some time now. Remember, over the COVID-19 pandemic period, most producers of oil scaled down, and when they scaled, the stocks went down, and that is now what is causing the crunch or the crunch in that sector. So I expect this to stabilize, Elijah, in the next 2 or 3 quarters. But as it is today, you still have that as a risk in our economy. Remember also, Elijah, just as Jen has put it, we not only consider energy crisis as the sole impact or the sole factor that is impacting our FX reserves. Remember, we have a lot of loans that we have to pay, and those loans are done. We have to pay them in dollars. Also, there are traders who are not able to get their consignments over the last 1 year. This is the time that now they're going out there to bring in merchandise, and when they do that, the demand on our dollars increases. Also, if you look at our major FX, Elijah, tourism is one of our major FX earners, and it has been down for quite some time now. That means that our FX earnings has gone down over the last 1 year. So if you put all those factors together, then we expect to have a lot of pressure on the Kenya shilling against the dollar. I foresee Kenya shilling going to maybe 111.80, 111.90, 112.50. then it will start coming down. But I foresee Central Bank of Kenya coming in handy and just doing a repo so that we have this is stabilized at maybe below 110. We want to leave it to the government because I know that's an area that central bank has a prerogative to try and manage so that we don't have imported inflation into our economy, Elijah.
Pretty much. At this point, I'd like to say thank you very much to you, Jane, and to you, George, for taking your time this morning to speak to us here at Metropole Television. Always quite invaluable. All right.
Thank you.
And that's exactly what it is that we had prepared for you this morning. Take them back to the time that they joined us in the studio this morning at Metropole TVKE across all your social media platforms. Let's keep the conversation going on. Hashtag business I am at Kenyan Simba. I'll see you later on for Metropole News. But for me, it's a good morning.